What is up, you guys? PT Carlo here, and today I quickly wanted to just hop on and talk about current market conditions, how things are setting up, how things are playing out, and really, are we going to crash? That's kind of what I want to talk about. A lot of people are asking me, is this the start of a correction? Do you think the stock market's going to crash? And so that's kind of like what I want to address now. So if you guys have never been here, thank you for stopping by. Hit the like button, subscribe to this channel. It's one of the easiest ways to really stay up to date with all of our content, and as well to help the channel out, help the channel grow, help us put more content out. I try to put at least 4 or 5 videos a week out on this channel, and then we have a second channel that's based more around trading, which I put 4 to 5 videos a day out because they're quick little videos. So you can use the link down below and go check that out, or just look up traders helping traders. But what I want to talk about in this video is a correction, right? Are we in a correction? And are we going to crash? So we're going to quickly kind of talk and go over some of these brief subjects. You can see right now, market's not looking too hot. We got the S&P 500 down 2%. We got the Dow Jones Industrial Average down 1.5%. We have the NASDAQ down about 3%. And the NASDAQ's the one that's been getting killed, and the VIX is up to almost 28. And the Russell is down pretty heavy too. Small caps are getting a absolute beating. We're going to talk about that too. Overall, why is this happening? There's a lot of things. So the 10-year treasury yield is jumping to like really its highest levels in a long time. A lot of people are asking, well, how does that affect the market? I am going to do a full breakdown on how that affects the market, but overall, yields usually go up when investors start buying up bonds. Investors buy up bonds because they're afraid of the economy, and bonds are sort of a hedge against the market. We're really not turning the Rona corner, I think, as fast as a lot of people are expecting. There's been a lot of delays with vaccinations due to like all the snow, and just the world is not moving forward as fast as we want. There's only so much stimulus that can be pushed. They're trying to push more stimulus out. It doesn't seem like we're going to get another agreement on another stimulus check. And overall, like, earnings were not too good for a lot of companies, and a lot of stocks are extremely overpriced right now, in my opinion. We'll talk about some ones that I think are extremely overpriced, and we'll talk about some stocks that I think are undervalued. And I'll probably do a whole video on that probably tomorrow, on some stocks I think that are a good buy right now, with prices on a lot of companies getting basically killed in the past couple of days. But overall, like, we've really seen this happen, and I'll make this a little bit smaller so we can take a look at some charting, but we've really seen this happen with tech companies. I mean, tech companies are the ones that are getting killed, and it's number one because, they've had the best year possible, but it's also a lot of these tech companies are overvalued, guys. They really, really are. And we'll talk about some of them and we'll go over them. But if you look at the S&P 500, we're only down 4% from recent highs. That is not correction territory. So for anybody who doesn't know what a correction is, usually a correction happens once a year, maybe once every 18 months, where the market kind of skids and pulls back 10%. And it's exactly what it sounds. The price of stocks correct themselves, not nearly as much as I think, but to where fair value, or at least, where they should be trading. You have a lot of companies that are trading way above where I think that they're fairly valued. And, that's pretty much how the market's been, I think, for the past couple of years, other than the Rona crash we had. But the S&P 500 is only down 4%. The Dow Jones Industrial Average hit all-time highs yesterday, right? Today we're down 2%. So, still we're only down 2% from highs. But then you got the NASDAQ. The NASDAQ is down almost 8% in the past week and a half. That is a correction territory. Usually corrections are about 10%, and we are getting to that correction territory. And to be quite honest, it's looking like the NASDAQ will probably continue to fall down to about 1,250, where we'll probably find a support there, and that's a 10% fade. And I do think that we are correcting. So I have a lot of students who are asking me, like, do you think the market's correcting? Yeah, we are. I mean, we're in the middle of a correction right now. But the thing is, the whole market's not correcting, because what happens is normally everything is overpriced, but there's a lot of things that aren't overpriced. Like, we're seeing recently Travel is getting a huge bump. So we're seeing American Airlines, we're seeing things like CCL, we're seeing Norwegian, we're seeing Marriott. These companies have had really good past couple of weeks, especially this week alone. You look at something like Marriott, that's up almost 21% because I've been saying this forever. Travel is extremely undervalued. Even when the Rona world, I think travel is undervalued. You look at things like banks, Citibank right now. Look at things like Wells Fargo. You look at things like Bank of America. All these stocks have been doing extremely well over the past week as the market's taking a fade. You look at commodities and industrial. You look at Boeing. Even though they had that bad news, I mean, Boeing was up like 8% yesterday and Kramer really pumped it. But Boeing doing pretty well. But the things that are correcting, look at things like tech, like Tesla. Tesla from highs to lows shaved 30% off of its market value in just 15 days. That is more than a correction. Some people would say that's a crash, right? 30%, if the market pulled back 30%, that could be considered a crash. Now, in Tesla's case, I don't think that that's a crash because Tesla's up huge in the past year. But you look at things like Tesla down pretty heavy. Look at things like Apple. Apple from lows to where we were yesterday to most recent highs, 17% fade, so almost a 20% fade. That is pretty crazy. Look at things like Amazon. Amazon's actually looking really good to enter here. Amazon's down 11% in the past week and a half. But, you look at small caps that are getting beaten to hell. Things like NNDM. Stock is down 45% in the past couple of weeks. Look at things like BNGO. Another one that right now is down 36%. Look at things like Palantir, one that everybody's buying up. This thing is down 48% from highs. So are we going to have a correction? We're in the middle of one. We're in the middle of a correction. Not all stocks are correcting themselves because a lot of stocks are undervalued. But these small cap tech stocks and tech in general is overvalued. And this leads us into the question of where are they going to fall? Well, I can't sit here and break down every single stock, but if we look at the tech sector and we just look at the E-mini NASDAQ 100 index futures, we can see that there's a pretty strong support on the NASDAQ around 12,500. Could we bounce here? Yes, we have bounced at this price level 3 times before, and I do think that we could bounce here. But overall, I wouldn't be surprised if the NASDAQ falls another 2.5–3%. And to be quite honest, I really wouldn't be surprised if the NASDAQ falls another 10%. The NASDAQ has been holding the market up entirely for the past year, right? Like as travel, as commodities, as SPY was dying and the Dow was getting killed, the NASDAQ has been ripping. I mean, you look at, let's just say 1 year ago today, the NASDAQ is still up 41%. And that's not even, recent highs. That was 52% today. From 1 year ago today to today, the market is, NASDAQ's up 40%. If we look at from lows of March up to highs, it's up 109% in a year. So to see the NASDAQ shave 15% potentially, I don't think that's crazy. That's not crazy. And I know it sucks. If you're a long-term investor, it's whatever, you just hold it. If you're a trader like I am, use proper risk management. If you're trading options or if you're trading shares and you still believe in the company, hold the shares. Like, it's not crazy to see this. Now, I keep getting a lot of people who are asking me, is this a crash? Are we going to be getting a crash? I don't think so. I mean, from a technical level, let's look at this technically, but let's look at the S&P 500. This is the past 3 years. Technically, what tends to happen is we get an ascending wedge pattern with a massive fade, followed by right now we have another ascending wedge pattern with a potential massive fade. So overall, I don't think a crash is coming just yet. Right? It seems like, I feel like I've been saying this forever, but it seems like probably within the next 6 months, things will start to look like back to normal. At least, if not by the end of the summer, things will look back to normal. We're learning to live in this Roni world that we have going on. And I don't think the sky is falling. I don't think it's time to sell everything you own. I do think if you're somebody who was investing in tech, taking profits a couple weeks ago, even a couple months ago, wasn't a bad idea. So overall, nothing to freak out about, nothing to fret about. You're going to live. Your portfolio is going to be fine. Just this stuff happens, right? You can't expect stocks like, Tesla. Market's closed. You can't expect stocks like Tesla to go up 1,000% in 9 months and not retrace, right? Like, that's just insane. So overall, guys, thank you for all the support. Hit the like button, subscribe to this channel. It means the world to me. Thank you so much, and I'll see you guys next time. Peace.